Hello and welcome to today's Tax in 10 topic, Making Tax Digital for VAT. My name is Toby Thorne and I'm a manager at James Cooper Creston, specialising in VAT. This session gives you some pointers regarding MTD for VAT, including the common issues we have faced to date and some changes that are to be implemented soon. Please note that the information is a headline only and, if necessary, always seek specialist advice specific to your circumstances. MTD for VAT requires VAT registered businesses with taxable turnover above the VAT registration threshold of £85,000 to keep records in digital form and file their VAT returns using compatible software. For most VAT registered businesses that are required to follow these new rules, the implementation date was VAT return periods that started on or after the 1st of April 2019. There was a small group of complex businesses such as trusts, VAT groups, overseas businesses, etc., that had their implementation date deferred 6 months to VAT return periods that started on or after the 1st of October 2019. This means that all VAT registered businesses with taxable turnover over 85,000 should have now signed up for MTD, and almost all of them, apart from some businesses on the 6-month deferral, should already be filing their VAT returns via MTD. If you are not, and you should be, you need to address this as soon as possible. Please feel free to contact me if you need any assistance. You can also voluntarily sign up for Making Tax Digital if your taxable turnover is below the registration threshold. We've signed a number of our clients up voluntarily because we are already maintaining their records on compatible software, and you only need to enter your sign-in credentials once every 18 months, so saves us time across the firm. Also, HMRC is still only getting the same 9-box return as they do using the non-MTD method. It's just how they receive this information that is different. I think there's been a bit of misunderstanding about the information HMRC will be receiving, but for now at least, it is the same as it has always been, just the 9-box VAT return. We've also found the new MTD HMRC online accounts are better for certain things, like clients updating their registration details, address, bank account, etc. So that is another benefit. So challenges. The main one that we found has been the system downtime. HMRC's system does seem to struggle, especially on days with lots of businesses submitting their MTD returns, usually on days approaching the filing deadline. In our experience, most of the time, if you try again later that day or the next day, you can usually get the return submitted. There have only been a few occasions where the system downtime has resulted in a return being filed late, but no default surcharge has been issued as it was an MTD fault. Our advice is, if you find yourself in this situation, is to always ensure the VAT payment is made on time, even if the return has not been submitted, to avoid any possible penalties being charged. Now on to some of the changes that are coming in this year. Firstly, to the soft landing. So HMRC have allowed a soft landing period for businesses to get in place digital links between all parts of their compatible software for MTD. However, that's changing this year. For the first year of mandation, businesses have not been required to have digital links between software programs, but after the first year they will be. You will therefore have until your first VAT return period starting on or after the 1st of April 2020 or the 1st of October 2020 if you're part of the deferral, to put digital links in place. During the soft landing period only, where a digital link has not been established between software programs, HMRC have accepted the use of copy and paste as being a digital link. Going forward, HMRC do not want any manual intervention or rekeying of figures at any stage throughout the VAT return process. So for businesses that use one piece of software that is MTD compliant, this is relatively straightforward. However, for businesses using multiple softwares or that have to export to Excel to compile their figures, this can be more difficult. Businesses with complex or legacy IT systems may require a longer period to put digital links in place across their functional software. These businesses can apply for additional time to put the required digital links in place, subject to qualifying criteria with HMRC. If your business qualifies, then additional time will be granted. I will just add that the cost alone is not sufficient reason to qualify. Businesses are expected to make every effort to comply with the digital links requirements by the end of the soft landing period. I think again there has been some misunderstanding with what is and isn't a digital link. We've saved a number of clients huge sums of money that they were going to spend on expensive software packages, when quite often a few small changes to their current procedures and a piece of simple bridging software, they can remain compliant without the need for this expensive software packages. Businesses can choose to use spreadsheets to both maintain digital records and perform tax calculations. Formulas between cells in a spreadsheet qualifies as a digital link, and it's not true that HMRC sees the use of spreadsheets or bridging software for MTD as a temporary arrangement. There is no set end date for the use of spreadsheets or bridging software within the MTD for VAT service. So the other change that's coming in this year is to the penalties. So I'll just touch on the new penalty point system that's coming into VAT from this year. Following the soft landing period, HMRC will update the VAT penalty system to bring it in line with penalties for late submission and payment of income tax and corporation tax. This will be based on a penalty point system, and late VAT submissions will accrue penalty points as follows: 1 penalty point for a missed VAT return, a fine after 4 accumulated points for a missed quarterly VAT return, a fine after 4 accumulated points for a missed monthly VAT return. Penalty points will last for 2 years before they expire. As well as the change to the VAT submission penalties, late payment of VAT returns is also changing. So if you make a VAT payment late by 15 days or less, there is no penalty. Late payment between 15 and 30 days results in a penalty of 50% of the HMRC interest rate charge. And late payment after 30 days results in a penalty of 100% of HMRC interest rate charge plus a daily interest charge. While the government has promised leniency on filing and record keeping for businesses doing their best to comply with MTD for VAT, it has not promised any breaks for businesses that do not pay their VAT bill on time or make an effort to comply. If you would like to know more or wish to seek our specialist advice, then please contact me directly or visit our website at www.jamescooper.co.uk. Thank you for listening.